You are welcome to Remit Forex Academy. In today's video, I'll be showing you 4 signs to know when a trend is over in any markets, any pair, and on any time frame. So definitely watch this video till the very end. If you are new to this channel, please don't forget to support this channel by leaving a like for this video, subscribe to the channel, and don't forget to turn on the bell notification for more updates like this, and also check the channel for forex videos and educational content. So let's dive right in. So 4 signs to know when a trend is over. So you can also call this reversal trading strategy. So sign number 1, major levels on higher time frame must be taken into consideration. When you are trading, let's say for example you trade the usdjpy, which I'm going to be using for this example, and the market approach a strong level, for example in this case a strong resistance at this very point, or market approach strong support, you must have to know that the market have capacity of reversing at this very point or at this very area. So if you are trading, you must have to trade from the higher time frame and back to the lower time frame. What that means is you do your analysis on the higher time frame and go back to place your trade on the lower time frame. Let's say for example, if the 1-day chart is your higher time frame, that means you will be taking trade on the 4-hour chart. Or if the 4-hour chart is your higher time frame, that also means that the 1-hour chart is a time frame you will be triggering your trade. And this very first method is by identifying key levels. In this case, this is a very strong resistance that appear on the chart right at this point, and we have a very important support that appear on the chart at this very area as well. And when you are choosing your strong level, you must choose the one that is very close to price action. What does that mean? This is where the market is right now. You're not considering this. The next strong support where we see a sporadic or significant market move from is this very area of support. And also for resistance, this very level of resistance is where we see the market move significantly downward from. So this very area is very close to price action. This very one is very close to price action as well. So after you've done this, the next thing you have to do is to go back to your lower time frame to place your trade. Let's say I go back to my 4-hour chart as my lower time frame. You discover that I still have my higher time frame levels appear on my chart. So let's say for example I was to take a buy position to the upside. I would take note of this very level of resistance at this very point into consideration. So if I take the trade at this very area and the market move upward, impulse, and then retrace and then move into this very area, I am looking to exit the trade at this very point of resistance. And the reason is because this very resistance is a critical level of resistance on the higher time frame. For me, it is the 1-day chart, and market retrace or reverse from this very area to the downside on the higher time frame, which is the 1-day chart. So once I know that a market approach this very level of resistance, then at this very point I am going to exit the trade. Okay, and one other thing you need to do is if you enter the trade at this very point, and probably your stop loss should be slightly below this very point of support at this very area, you have to shift your stop loss when the market move an impulse and after retracement the next continuation. What that means is if market move upward and then come back down, the market movement for this impulse, when the market begin to move upward, you have to bring your stop loss from here and place it at this very point, because when markets approach a level of critical resistance on the higher time frame, there is a high probability that the market will just sporadically come back to the downside in a full formation in this very manner, so that you don't get stopped out or be in loss in that very position. So this is very important. You need to pay attention to key levels, and you must have to draw that level on the higher time frame. For example, in this case, the 1-day chart. The next thing you have to know, or the next sign you must have to take into consideration to know when a trend is over or for trend reversal, is RSI at overbought and oversold and divergences. So you consider RSI at overbought condition for an uptrend and for oversold condition for a downtrend, and you take into consideration the divergence. Let me show you that in a moment. So you go to the indicator section and put on your RSI indicator on your chart. You take the RSI into consideration for the higher time frame. Okay, so we want to see that the RSI have entered into oversold and overbought conditions. So for the upward movement, for an uptrend, the RSI have to enter into overbought condition. You see the RSI enter into overbought condition right here, and the market begin to drop back down on the RSI, but on the chart market was moving upwards. So we need a further confirmation that this trend is over with divergence. If you look at this very area as well, the market enter into oversold condition on the RSI indicator at this very point, and then market begin to drop back down, and afterward reversal in the market to the upside. So from this very point, market begin to move upward, but the RSI created a little new higher low at this very point. So a divergence is required for us to further confirm this very level in the market. So from here, if you plot out divergence with this second sign, is you have to plot from this very point where the market enter into the overbought condition for an uptrend upward. So market was making new highs, okay, with price action. And if you look at the indicator at this very point, market was coming back to the downside. Okay, so market was coming back down on the indicator, which means there is a divergence between price and the indicator. So this will further give us a confirmation that the market is about to come back to the downside. And this very area on the support, market move from here downward on this very point of support. And if you look at the indicator, market creates a new high at this very point. So from here to the upside, market was trending upward on the RSI indicator. This is a clear divergence. So you're not only looking for market entry into overbought for an uptrend in this very case, or oversold for a downtrend in this very case, you are also paying attention to market divergence. So once you see this divergence appear on the chart and then you confirm your divergence, then market is going to move upward. This is very, very important. This work on any pair and any time frame. And the next thing, or the next sign you must have to pay attention to on your chart to know reversal or when the trend is over, is knowing your candlestick patterns and chart pattern at key level. You must have to identify that. And in this very case, if you look at this very area on the chart right now, let me remove this RSI, you discover that this very candlestick right here is a closing price bullish reversal pattern, and afterward market move upward. This very candlestick as well is a bearish candlestick reversal pattern. So this very candlestick triggers the market to move downward, and this is very important, and you must have to learn how to know this very candlestick pattern. And at this very point as well, we see a pattern that appear on the chart, and this pattern is a falling wedge. So a falling wedge appear right here on the chart, and we need to find out when the market break out from the wedge. Market broke out from the wedge in this very example at this very point and begin to move to the upside. So from here, market confirmed that this very trend downward is over and the market is beginning to move upward on the lower time frame, that is the 4-hour chart. So this is very, very important. Remember, you are looking for these signs on the higher time frame in this very case. And then if you look at the resistance level, you discover that the market come back down, and from this very point we have a very straight resistance right here, and a pattern which is a triangular pattern appear on this very area. Afterward, the market break on the pattern and market begin to move to the downside. So two things you have to pay attention to here is a candlestick pattern and a chart pattern. Once you identify that it is a very clear sign that the market is going to move to the downside, which you must have to identify. The last sign here is reduced momentum on the lower time frame. So if you are on the higher time frame, for example, in this case, 1-day chart, usdjpy, in this case, you have to take into consideration the very level. So let me clear this off my chart. And if you take this very level of support, when markets move downward and you take this level of support into consideration, then you go back to your lower time frame and look for reduced momentum. So if I take this and go back to my 4-hour chart right here, you see that this very point on the chart becomes very, very clear to me. So what was the market doing at this very point? You see that the market was moving to the downside aggressively. Market creates a new low, come back to the upside, create another new low, and then from this area we see reduced momentum with price action at this very point. And you can compare the momentum that you see right here coming back to the downside from the BS to the momentum that happened right at this very point. These ones are very severe. This one is very severe compared to what we now see at this very area and at this very point. This is very, very important. So what that means is that the bulls are about to take control of the market and the bears are getting weak. The next confirmation for reduced momentum is a breakout of structure. So what happened here is that after the market reduced momentum, we see a breakout of structure at this very point. Market retests the level and then move to the upside. So market broke out of structure, which is this very level of resistance. So this level of resistance broke out and then come back down to retest the level and move to the upside. If you look at the way the market was moving downward, market never break out of structure when it was moving from here to the downside. It was at this very point that we see that very break of structure, which signified that the trend is over and that the market is going to move to the upside. So this is when you begin to look for buy opportunity on your chart, moving upward, approaching another level of resistance or key level on the higher time frame. This is very, very important. You need to consider this and put this into your strategy. So this is the 4 signs you must have to pay attention to know when trend reversal is in play or when a trend is about to change in the market. So this is how you identify trend reversal with these 4 signs. If this is your first time on this channel, please don't forget to support the channel with a like and subscribe, turn on the bell notification for more updates like this. Also check the channel for other forex videos, educational content and technical analysis. If you want to learn how to trade forex step by step with a simple guide to a professional level, check the description of this video here. Reach out to me immediately and enroll for my trading course. Thank you very much for watching today's video and I will see you in the next video.